Stop scrolling for a second because you might be making these five credit mistakes right now, and they could be costing you thousands of dollars. I'm talking about higher interest rates, denied loan applications, or denied business funding, and you might be even losing out on job opportunities, all because of the simple credit mistakes that are easily avoidable. And trust me, mistake number five, people do not even realize it's hurting them. So stay locked in with me because I'm going to be breaking down these five costly credit mistakes and how to fix them fast so you can stop throwing away your money. All right, let's dive right into it. Hey guys, welcome back to my channel. If you are new here, my name is Chess. I've secured well over 400K in business funding for my businesses, and I've helped entrepreneurs and business owners just like yourself secure the funding they need to grow. And everything I teach here is based on real world experiences, either from my journey and how I did it, or from the hundreds of clients that I've worked with already. And bad credit isn't just an inconvenience for you, it can mean higher interest rates on loans, higher insurance premiums, and you might be even getting denied for business funding. Or if you're trying to buy a house or rent out a place, you might be getting denied for housing. So trust me, this is something that you need to know. And stick around because at the end of this video, I'll be sharing a powerful hack that can boost your credit fast if you already made one of these five mistakes. All right, let's jump right into it. So, the first mistake is one of the fastest ways to tank your credit score, and that is high utilization, high credit utilization. So, credit utilization is how much of your available credit you're using. So, if you have a $10,000 limit and your balance is 5,000, your utilization is 50%. And that is bad news. If you're using more than 30% of your limit, lenders see you as a risk, even if you always pay on time. So, an example, one of my clients had a 750 credit score, which is strong, right? But after a few big purchases, his utilization shot straight up and his score dropped 70 points almost overnight. To fix this, keep your utilization under 10% for the best scores and pay your balance down before your statement closing date. So your reported balance stays low. And if you need a quick boost, ask for a credit limit increase to instantly improve your utilization ratio. The second mistake is paying only the minimum payment on your credit card. This is a trap because banks love to keep you in the loop. So they keep you in the debt longer and they make a lot more money off you in interest. So let's say you have $5,000 on one card with a 20% interest. If you only pay the minimum, do you know how long it will take for you to pay that off? Over 20 years, and you'd end up paying more than double in interest. So, what's the fix? Pay at least 3 to 5 times the minimum when possible. Use your debt snowball or avalanche method to knock out the high interest debt first. And if you're struggling, call your lender. Sometimes they will lower the interest rates if you ask. Little hack for you. So the third mistakes I see is closing out old credit accounts. A lot of people think if I don't use your credit card anymore, I'll just close it out. Sounds smart, right? Wrong. Closing an old account shortens your credit history and raises your utilization ratio, both of which can drop your score super fast. A friend of mine had a 10-year-old credit card he hasn't used in years and he closed it. What the hell, man? Thinking it didn't matter, the next month his credit dropped almost 40 points. To avoid this, we want to keep old accounts open, even if you do not use them. If there is an annual fee, you can always call the bank and ask if you could downgrade the card to a no fee version of the card instead of closing it. That way, you keep your credit history. The fourth mistake is ignoring your credit report. Your credit report isn't always accurate, and the errors can always cost you a certain amount of points. I once found a $500 medical bill on my report that wasn't even mine. If I haven't checked it, it could have costed me thousands in higher interest and also my credit score. So check your credit report at least twice a year. You could go on Experian.com, they can check it for free. And if you find errors, dispute them immediately. Many of these get removed fast. The fifth mistake is applying for too much credit all at once. Every time you apply for credit, a hard inquiry is on your report. Too many in a short time, and your credit score is going to tank. So, one of my clients, they applied for 5 credit cards in a week. His score dropped almost 60 points from those inquiries alone. To avoid this, you want to space out your applications, use pre approvals to check offers without a hard inquiry, and if you need multiple credit cards all at once, apply it on the same day. Credit bureaus may count it as one inquiry instead of several. Now, if you already made all these mistakes, here's how you can bounce back fast. You can either increase your credit limits. Uh, this will instantly lower your utilization. You can negotiate with lenders, call them for a goodwill adjustment on your late payments. You could also become an authorized user. If you have a family member, cousin, sister, brother that has good credit, you can get added as an authorized user, and that will boost your score. All right, that's it for today. If you do need one-on-one help to secure $100,000 or more in business funding, or you want it completely done for you, apply to join my mentorship program or my done for you program in the links in the description below or in the pinned comments below as well. This is CashflowChes. I'll see you guys in the next one.